My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in from Dallas, Texas, we have a very experienced real estate entrepreneur, somebody who kind of worked himself up through the ranks. He's one of those smart guys, I believe, as an engineer by training and by trade originally, and then got into house flipping and some small multifamily stuff and some small development stuff, and then took the big leap into multifamily and focuses a lot on value add. So Jorge Abreu, welcome to the show. Great to have you.
Thank you. Thank you. I'm excited.
So Jorge, give us a little snapshot. Your company is Elevate Commercial Investment Group. We're doing this interview middle of 2025. What do you guys currently have in the portfolio? What kind of properties, how many units? Just kind of give us a little snapshot of where you're at.
Yeah, absolutely. We exited quite a bit while the market was hot. Close to
That was a
about
good time to exit.
yeah, yeah, close to about 2,000 units at that time. But currently we've got a little bit over 5,000 units. It's a good mixture of your typical, Class C value add property, and then the last few years, we've been more focused on Class A newer deals that
Mm.
still have a nice value add to it, but without all the renovations and headaches that come with the older properties.
Yeah, I imagine, you've got that renovation background from your flipping days and you brought that into multifamily, but I would guess it's a completely different kettle of fish once you're talking about, big properties. What's kind of your buy box size wise these days, Jorge? How many units are you guys looking at?
We're looking at, we like to be at least over 100 units where we're
Mhm.
able to have on-site staff, and then, you know, no bigger than about 300, 350 units or so is where it starts getting, more than anything, you just got to raise a lot more equity when you're
Yeah.
buying a deal that big.
Well, you've built up a massive portfolio. What kind of time frame was it? Like when did you start? When did you stop like the single family houses, the smaller deals and focus on multifamily?
Yeah, started making that transition around 2018 or
Wow.
so.
Okay.
Yeah, I think our first deal we uh, acquired was in 2018.
Well, that's pretty massive growth in a relatively short period of time. Might not seem like it to you, but being an old dude like I am and looking back, 2018 ain't that long ago. What would you kind of say is the secret to your success in growing that big that fast?
Yeah, I mean, I think it was being open to partnerships and partnering with others and really, leveraging other strong points and being able to put the pieces together on a deal.
Mhm.
And yeah, I mean, once we kind of figured that all out and as you begin to get that traction, then uh, the investor database begins to grow and we start having a lot of success. And then, you know, one investor starts telling his friends and then it just starts
Mhm.
growing and exponentially.
Okay, so it's kind of a hockey stick type thing. Like it was a little bit slow going at the beginning, but then you really ramped up. Is that fair?
Absolutely. Yep.
Yeah.
Yep.
Very good. So Jorge, you focus, it sounds like earlier days you're focusing on Class C value add type properties. So basically, if I understand correctly, older buildings that, maybe were uh, had a little bit of deferred maintenance or a lot of deferred maintenance. And
The uglier the better. Yeah.
yeah, okay, we buy ugly apartments kind of thing.
Yes.
And so I can get my head around adding value there externally, internally, just kind of bringing things up to snuff and increasing the rents to market rents. Nowadays, you mentioned that you're starting to focus more on Class A type buildings, which I would imagine are much newer. They're already pretty spiffy, pretty nice. How are you able to do value add to a building that's already in good shape?
Yeah, that's a great question. And when we first started going into that Class A space, I always got asked that question because the perception is you can't add value to a Class A apartment. Well, we got really good at the operations, right? We brought in management in-house and we're really able to maximize the NOI. So on a lot of these Class A deals, it's more an operational play than really renovations. We do some minimal renovations. A lot of it is very focused on ROI. So we're adding backyards and we're able to get, rent those yards out for 75 to, in some locations, $150 a month, adding carports. So things that are going to bring in income.
So
Um,
just so I can get a picture, adding backyards, what kind of buildings are we talking about? Because when I envision a multifamily, an apartment building, I'm thinking vertical. Are these more, ground level type properties or what?
Garden style where, obviously we're only adding them to the first floor, but
Yeah.
yeah, all the bottom floors will get the backyards and then
Okay.
people pay premium to have that.
Interesting. So prior to adding the backyard, it would have just been communal green space back there, pretty
Correct.
much.
Correct. Yeah.
Interesting. Okay, that's cool. That makes a ton of sense. And then you're putting a car park, like a garage on the back there, or covering
We
for
have done garages, but
vehicles.
carport just a covered
Yeah,
for them to be able to park their cars under and be protected.
that is really smart. So if you're just renting out the backyard, if that's getting you another, what do you say, 175 bucks a month premium or so
About
100 bucks,
150-ish
100,
around there. Yeah.
150 bucks a month premium. That's pure profit right there, man. That's
Yeah. Yep.
okay, smart. So that's one way. And then you mentioned operationally, you've taken the property management in-house. So is that like, yeah, you have to have lots of units close together for that to make sense, I would imagine.
Yeah, yeah. I mean, we didn't do it earlier for that reason, right? So it wasn't until we got to I think it was right around maybe 3,000 units or so where it started being profitable in a
Mm.
sense or um so
The
yeah,
juice was worth the squeeze at that point.
correct, correct.
Yeah.
Um but yeah, I mean it's allowed us to be able to have a lot more control of the management. We've lowered the expenses tremendously. Uh, for some reason the third party management, um, it's tough finding one that really cares about the property as much as the owner does.
Yeah, well, yeah, I think pretty virtually impossible.
Yeah.
I would imagine. Okay, very good. So any other, I love that backyard idea and the carports. Any other type things like that you guys have done to squeeze
Yeah, I
more
mean, look, there's a
ROI?
real simple one, which is internet bulk packages where we're getting internet for the whole apartment and then we're deciding how much we want to charge the residents for. So on that, I mean, we can be anywhere paying maybe $25 a unit and charging 85, 95 a
Wow.
unit. So I mean, there's some pretty good profit there for something that they're already paying for.
Hmm.
And we're still giving it to them cheaper than if they were to go straight to the provider.
Oh, really? Yeah, that is huge. So you almost become your own little utility company there in the sense of providing internet. You
Yep,
buy it wholesale and sell it to them even still cheaper than retail for the end user. Yeah,
exactly.
that's really, really smart. Very cool. So, Jorge, a lot of multifamily syndicators have kind of gone through the ringer over the last few years. Sounds like you guys were able to exit a lot of your properties at the peak. Has the current situation affected you negatively in any way?
I mean, yeah, the last couple of years we've definitely had to dig in and boost that NOI on several of our deals. We had to execute on refinances and just make certain moves to avoid any issues. So we've been able to maneuver through it, but it's not been easy. I mean, it's been a lot of work for sure.
Most definitely. So, Jorge, it sounds like in your deals, in your syndications, you guys are kind of like the lead GP in these projects. Is that fair to say? Do you partner with other people or do you primarily bring these down by yourselves?
We do partner with others, but yes, that is accurate. We are usually the lead GP on the deal, and then we'll bring in other partners if needed.
And kind of what role or roles do you guys play? Obviously, in the property management. Well, what else do you take the lead on?
I mean, the equity raise, we're usually the one leading it for
Mhm.
sure. We may take on some co-GPs that can bring some equity as well.
Mhm.
We'd usually like to have a boots on the ground. So, right now we're in 8 different states. So, um, if we can find a partner that's there local, we will bring them in. Um,
Now, would they help out with the management in that respect, or what would you do if like, or would you put a team on the ground there for property
I
management?
mean, we would still bring our management team
Okay.
there.
Yeah.
But it would just be a partner, an actual owner that can just check in on them.
Got it.
Because even though it's our management company, we still check in on, we still do the asset management. Like if it was a third party, we still check in like it was a third party. We've got to make sure we hold them accountable.
Yeah, for sure. So do you typically like move people from HQ off to these, distant properties? Do you hire people locally? How do you kind of disperse the management team to manage these
Yeah, no, we
sites?
hire people locally. We
Yeah.
do have uh, some regionals that will travel for sure. Same with our asset management team. They'll travel and check on the properties.
Yeah, very cool. Very, very interesting. So it sounds like capital raising is something that you guys do very, very well. Uh, has it become any more challenging these days under the current environment, or you guys, is it still pretty straightforward for
I wish.
you? Yeah.
It's definitely become more of a challenge
Yeah.
all around, whether it's we do work with some private equity groups. They've become a lot more picky to say the least. They've got a certain box now that's hard to fit on a lot of deals. Um, and then as far as the retail investors, a lot of them are kind of sitting out on the sidelines, and there's a lot going on, obviously, whether it's tariffs, whether it's a war, whether, I mean, there's all kinds of stuff happening.
Yeah.
So yeah, we've definitely had to educate them a lot more and, show them that, hey, look, it's especially multifamily. There's so much good fundamentals still for multifamily. It's historically, if you look at recessions and just down markets, multifamily fares really well compared to other real estate sectors. So, we do find once we educate them and we spend more time with them, they do end up investing.
What do you find these days is the best way to educate people? Are you talking to people one on one? You're doing webinars? I think you guys do events, you do meetups on a regular basis, right?
Yeah, we
Nice.
do pretty much everything, all the
Yeah.
above. We constantly have webinars two times a month, maybe once a month. We do a meetup, so and then we're constantly going to events as well and social media.
Hmm. Tell me a little bit about your meetup because everything's smart that you guys are doing, but what impact has the meetup had for you?
I mean, I think it's been huge because I don't know the actual percentage, but once an investor meets us in person, it's the chances of them investing are much higher.
Hmm.
Not that we don't get investors that invest without meeting us, but so I think it's always great to be able to have that event and invite the investors, um, and just getting to even some of our partners and whatnot and the brokers. So, we have a lot of our vendors that come to the event as well. So it's nice to get in person.
Yeah, most definitely. So you're based in Dallas. Do you have quite a few properties in and around your area in Texas?
We do. In Dallas and Houston, we have quite a bit still, and then we've got Oklahoma, Northwest Arkansas, Florida, probably the furthest being closer to you, maybe South Dakota.
Uh-huh. Still not that close, but So, Jorge, as we're kind of halfway through 2025, I know a lot of not so experienced syndicators got in some pretty serious trouble over the last few years, and with interest rates going up and disbursements stopping and that sort of thing. Do you see opportunities coming down the pipeline for some of these distressed deals?
Sure, we've seen some. It's not that wave that I think some people were talking about.
Mhm.
The lenders are definitely being very cautious and they're giving a lot of chances and extensions and a lot of things get done behind the doors too. And
Yeah.
so it's not like this flood of foreclosures and whatnot, but we definitely have seen some opportunities. Some individuals that maybe are heading towards having those issues, so
Yeah.
they're willing to sell for less than they would if they didn't have, bridge loan coming up or something
Yeah.
like that. And I think it's going to continue on. I think with as slow as the lenders have been moving, at some point they're going to have to take these properties back, and so I'm thinking maybe even towards the end of this year we'll see more of that.
So for you guys in your portfolio, what are you looking to do over the next 12 months or so? Where do you see things going over the next year?
Yeah, we're working on our last few refinances. Once we get those done, our existing portfolio is going to be in a very nice, stable position, kind of just
Nice.
waiting for the market and whatnot, um, which will free up a lot of our time to focus a little bit more on the acquisitions, which we haven't dropped the ball per se. I mean, we've been submitting offers. We closed one. Last one we closed was earlier this year. Working on one right now that we hope to get under contract. But look, I think it's still a great time to buy right now. I think especially some of the stuff we're focusing on with the A class, construction costs are not coming down, right?
Mm.
So
Yeah.
replacement cost on some of these deals that were just finished a couple years ago, or even some that are even wrapping up now, you're not going to be able to build that for the same cost anymore. So, that's what we're really excited about and finding those type of deals. And then
Then slicing it, dicing up the backyard, and
yep. Then maximizing that NOI and kind of sitting on them and knowing that our cost basis is great.
yeah, no, that is fantastic. Jorge, well, this has been a lot of fun. Thank you very much. Now, if people are wanting to find out more about you and Elevate, where can they go?
Yeah, the easiest thing is probably go to our website, which is elevatecig.com. You'll see a ton of information about us there. You can reach out to us from the website, and we'd love to connect.
Awesome, Jorge. Well, thanks so much for being on the show.
Thank you, Dave.
All right, everybody, take care. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.